I'm Sarah Borkson-Keto here in New York for REIT Week 2017, NAREIT's Investor Forum. I'm joined today by David Nunes, President and CEO of Rayonier. Welcome, David.
It's good to be here.
So can I start by asking you about demand from China, how you see that playing out in the near term?
We look at China both from a demand standpoint, but also it's important to understand that supply plays a big role. And in particular, China instituted a ban on the harvest of native forests in northeast China that had a big impact on the supply. And so we've seen that benefit all of the log exporters into China. And so while we've had a fairly stable demand, the supply has been reduced. And so what this has translated to is higher levels of consumption than we've experienced historically. And this year in particular, we saw this in the rapid rate of decline in the inventory levels after the Chinese New Year in February. Our inventory levels were at 4.2 million cubic meters at the end of the Chinese New Year, and they currently sit at about 3.3. And that translates to an inventory demand ratio of about 1.5. And when we see the ratio in that realm, we tend to have fairly stable to slightly rising markets. And so that's been a real positive in terms of how we look at China. The other thing to keep in mind is that you've got to look at how other markets are behaving. And there's three primary markets for us that influence that. One is certainly the New Zealand domestic market, where roughly half our volume goes, and the other two export markets of South Korea and India. And both of those markets are strong and are helping to sort of buttress the China market. So all those things kind of play into a role in terms of how that China market behaves going forward.
Earlier this year, the company made some acquisitions in the southeast. How do you see those fitting into the portfolio? We're
very excited to have those lands. We acquired 95,000 acres in three separate negotiated transactions, and our forestry guys are as excited about those as they've been in over a decade in terms of the quality of the assets. And there's really four things that those assets do for us. First of all, they're very highly productive. In forestry, we measure what's called site index, which is the height of the tree at age 25. And in this particular case, the average site index was 78 feet. And that translates to a higher productivity. So our sustainable harvest from these lands will be 450,000 tons per year, which equates to 4.7 tons per acre per year, which is much higher than both our average as well as the industry average. So that's an important element. The other thing to keep in mind is markets. In addition to being very productive lands, these are in really good markets. The top three markets, as measured by Timberlands South, were the three markets that this property touches, which is in the coastal Georgia, South Carolina, and Florida. And so we had an acquisition that was fully in those top markets. The third element is the complementary nature that it has to our existing footprint. We will be growing our coastal footprint by roughly 15%, and so this is an important addition. And as well, we have a number of leases that will be expiring over the next decade, so it helps to match those. And then finally, it will translate into much stronger financial results based on the high productivity of these lands, as well as the fact that there's a high average age of 14 years of these lands that we're acquiring. We project that these lands will translate to roughly $13 million of incremental EBITDA and $10 million of CAD. And so we think that they're going to be a really strong addition to our portfolio.
And as you look out for the rest of the year, are there any particular challenges that you're looking at?
I don't know that I would say challenges. There are certainly some things that we're mindful of. I think one of them is there's an awful lot in the press of late about the softwood lumber agreement and sort of how that's going to translate. And I think a lot of people, certainly in the investment community, feel that's going to occur faster than we perhaps do. And it's going to take some time, we think, for that to ripple through. We believe long term it's going to translate into more lumber being produced in the U.S. and particularly in the U.S. South. But we think that it's going to be differential over time. We believe that with the variable build and inventory across the U.S. South, you're going to see differential price elasticity over time. And so we see that being a more slowly evolving set of changes. And then I think The other area that I think we're mindful of is that the South has had a prolonged period of dry weather, and so that has led to more access to lands and hence more supply on the market. And then in addition to that, we've had some salvage from some tornado and fire damage, and those three things together have added a fair bit of volume into the market, and so it's softened some of the sub-markets within the South. So we're keeping an eye on that as well.
Okay, great. Well, thank you very much, David.
My pleasure.
And for more news and information on REIT Week 2017, be sure to visit REIT.com.